Welcome, ladies and gentlemen, to our new episode. So today we're going to look at the crypto, so the rise of digital currencies and CBDs, which is stand for Central Bank and Digital Currencies. So in the case of digital currencies, it is all about the blockchain technology, which is like the Bitcoin and Ethereums. So in this case, the blockchain simply stores the record of ownership of digital assets. So in this case, digital assets are like the Bitcoins and Ethereums. So it is like trying to look at the relationship. In the case of the Bitcoins and the Ethereums, it almost fascinated like investors in this case. So first of all, we're going to look at the key differences between cryptocurrencies and CBDs, which is stand for Central Bank Digital Currencies. Then after that, number two, look at why the CBDs are gaining popularities, like the benefit and all of that. Then number three, we're going to look at examples of countries which are exploring CBDs, central bank digital currencies. And then number four, we're going to look at the potential benefits of CBDs, central bank digital currencies. So you're going to read that a lot in this video. Then number five, we're going to look at the challenges and risk of CBDs. Then after that, I'm going to give a quick summary at the end, just as usually do in all the episodes, just to sum up really everything that we're going to learn in this new episode, a new video. So you ready, ladies and gentlemen? Tighten belt and let's begin. So in the case of the rise of digital currencies and the CBD, central bank digital currencies, it's all about centralization and decentralization. So the centralization are the CBDs, the central bank digital currencies. So I'm going to replace them with CBDs only. So it just stands for central bank digital currencies. So in this case, it's like those are like the opposite really to commercial and private banks. So because the central banks are the ones who print money, and the ones who control the interest rate as well, lowering the interest rate, sometimes increasing as well, just encouraging or discouraging people from borrowing the money from the banks. So in the case of decentralization, there's all about the Bitcoin or the blockchain technology. So it is more decentralized, meaning it's not in control of someone or anybody really. So it's just there online. So we have like the Bitcoin and Ethereum, which are all decentralized digital currencies. So in this case, as I said in the previous episodes, I said the main things which they're trying to do, like in the case of the BRICS, which stands for Brazil, Russia, I for India, C for China, and South Africa. There are more countries as well who are joining the BRICS. So what they're trying to do is to fight against stagnation of money. So stagnation of money is all about having more people. We're having billionaires, millionaires, or sometimes trillionaires in our generation. So there are people who have more money in their pockets or wealth just sitting in their saving accounts, while some people don't even have a penny in their pockets. So there's a stagnation of money. So what is wealth? Wealth is the money which is left unused. Instead of investing that money, keeping it moving around and around. Some people have money, just stock of money put like in saved accounts, sometimes just in the houses or pockets, which are not even contributing anything. That is called the stagnation of money. So to get rid of stagnation of money or the market crisis or inflation, you need to digitalize everything like Bitcoin or Ethereum or just in central bank digital currencies. So that is what they're trying to do in the case of the BRICS. So we're going to look now, we're going to get deep inside. So the world of finance is rapidly evolving, changing really. And at the foremost of this transformation or transmutation or transition is the rise of digital currencies, especially the central bank digital currencies. Digital currencies, which just stand for CBDs. So unlike decentralized currencies like Bitcoin or Ethereum as well, CBDs are digital versions of national currencies issued and regulated by central banks. So in this case, Bitcoin have more freedom. Anyone can it's just the online. It's just decentralized, meaning no one controls the Bitcoin. But in the case of CBDs, the central bank digital currencies, you have like the government or someone really who have been centralized, who's taking full control of currency or the new digital currencies. So the development and the implementation of CBDs represent a major shift in how governments and financial institutions view the future of money. So in the case of financial institutions, like the banks, commercial, and sometimes we have private banks as well in the country. So number one, we're going to look at the key differences between cryptocurrencies and CBDs, the central bank digital currencies. So you're going to read that a lot in this episode. So one of that is like centralization and decentralization. So you're going to look at the difference between those two. So in the case of cryptocurrencies, they're like this decentralization example. So like Bitcoin and Ethereum operate on the decentralized networks, like meaning no single entity controls the network. No one controls the Bitcoin or the network. Like transactions are verified through consensus mechanism, like the proof of work, which just stands for POV, P-O-W, or proof of stake, POS or POS. In the case of CBDs, the central bank digital currencies, on the other hand, are centralized and issued by a country's central bank. So in the case of the country's central bank, the central bank are the one who control the interest rate, and they're the ones also print money. In the case of fight inflation or recession. So just like traditional fiat currency, so the central bank maintains full control over the supply and regulations of the digital currency. So that's the difference between centralization and decentralization. So centralization is based on the government side. Decentralization, people, everyone have power over their own money. So number two of key differences between crypto and the CBDs is like the legal status or legal status. Like cryptocurrencies operate independently of governments and are not considered a legal tender or currency in most countries. So most countries don't take them serious in the case of Bitcoins and Ethereums or the blockchain technology, which are decentralized instead of being centralized. So in the case of CBDs, are government backed and would be considered like legal tender or currency, meaning they will be accepted as a form of payment across the country, similar to cash or bank transfers. So because they are more centralized, more security, more government backed, they are being considered as legal. So in this case, we can redefine the meaning of legal or illegal. So what is the difference when all of them are just digital currencies? So number three of that, we're still on the key differences between crypto and the CBDs. So the monetary policy or the fiscal policies. So the cryptocurrencies like typically have like a fixed supply limits. In the case of crypto, you have like the Bitcoins is like 21 million cap. That's like the limits, supply limits set on the Bitcoin, 21 million cap, like which can lead to deflationary tendency. In the case of deflationary is like the opposite of inflation. So deflation is like when the price or the value of money goes beyond or below the means. In this case, like the consumers are more discouraged, they have more fearful really in the case of expenditure or spending consumptions. So CBDs will allow central banks to control and manage the money supply more effectively, like using digital currencies to directly influence monetary or fiscal policy, like including interest rates, inflation, and liquidity. So inflation is just the rise of price of a given period or given time. In the case of liquidity, can be cash or saved money in the account or saving accounts. Number two, we're going to look at why the CBDs, the central bank digital currencies, gaining popularity. This can act as a benefit, or why they are gaining more popularity in our generation or in the 21st century. So the first one is like the financial inclusion. To think in the case of financial inclusion, so like the CBDs would consider access to digital financial services for populations without access to traditional banking. So in this case, we try to move away from traditional banking and go more digital, from paper cash to digitalized one. So in developing countries, like where banking infrastructure is limited, CBDs could help like include more people in the formal economy. So those are like the factors which are making the CBDs gain more popularity. The second factor is like the efficiency and the speed as well of CBDs. So digital currencies like streamline payment systems, like enabling faster and cheaper transactions, like domestically and across borders. So transactions like buying and selling domestically can be like nationally in country or crossing border. That's like at the international level. So CBDs, or central bank digital currencies, could potentially eliminate the need for intermediaries, like reducing transactions cost and settlement times. The third factor why the CBDs are gaining more popularity is like fight against financial crimes as well, which is good in the case of digitalization. So CBDs can be designed with greater traceability than physical cash. So in the case of physical cash, can be like paper money or coins, like allowing the government to better monitor transactions and combat money laundering, like tax evasion as well, and terrorism financing. So in the case of tax evasion, it's like the rich versus the poor. The poor usually pay more tax than the rich, so most of the rich usually avoid taxation. Maybe that's how they gain their own richness. Billions, millions become millionaires and millionaires and billionaires as well. So the fourth factor which make the CBDs become more popular is like reducing reliance like on cash. So in the case of reducing reliance on cash, like trying to throw cash away, so many central banks are considering CBDs, central bank digital currencies, as part of their strategy to reduce reliance on physical cash, which is expensive to produce. In the case of physical cash, it is more expensive to produce. In the case of printing, maybe coal as well. And maintaining and distribute. Physical cash is more expensive to print, to produce, maintaining and distribute as well. Like during the COVID-19 pandemic, concerns about the hygiene and handling cash accelerated the interest in the digital currency during the COVID. Like if you touch, the more people touch the money, the more hygiene or the more bacteria also spread around. So the fifth factor is like competing with the cryptocurrencies. So as the cryptocurrencies like the Bitcoin and the stable coins such as Tether, which is a token, and the USD, which is the US dollar as well, coin, gain popularity, central banks want to offer an alternative that combines the benefits of digital currencies with the stability and trust of a state-backed asset or credit in this case. Number 3, we're going to look at examples of countries exploring the CBDs. The example which have used or trying to use the CBDs, the central bank the digital currencies. So the first one is like the China as well. They use the digital yuan, the YUAN, which is they denote as E-CNY, the digital yuan. So China has been one of the pioneers like in the CBD's development. The country has already rolled out a pilot programs or trial program for its digital currency known as the digital yuan or ECNY in various cities. So in the case of China, most of the people use digital. All the money have been converted to digitally. So in the case, it is so scarce to see someone using cash in China. So they usually pay using their credit cards or just online or just the tapping with the phone, something like that. So the goal is to have a fully functioning digital currency to support the domestic economy and international trade. The second one is like the EU, European Union. They are also trying to explore the digital euro as well, because we use euro here in Europe. So the European Central Bank, the ECB, is actively exploring the creation of a digital euro as well. So the initiative aims to complement existing payment systems and offer secure, fast and efficient alternative to cash and bank transfers, which can be a good advantage as well for people who live in Europe. So the third one is like the United States. They're trying to go with the digital dollar instead of cash or money. So the US as well, United States Federal Reserve, which is like the Fed or central bank, has been searching the concept of a digital dollar, like to modernize its like payment infrastructure as well. While the US is taking a more cautiously approach compared to China. In the case of the US, they're trying to look at the growing interest from the policymakers, and business indicates a shift toward digital currency adoption. So we have like the fourth one is like the Bahamas, that have like the sand dollar as well. The Bahamas is just like a country in the Caribbean. So they're looking at the sand dollar, sand, real sand, like the beach sand. So the Bahamas also launched like the sand dollar, like which is one of the first operational CBDs in the world. One of the operational central bank digital currencies in the world. So this digital currency is like aims to provide financial inclusion and modernize the financial infrastructure of the island nation. The fifth one is like India. Look at India also and Africa. So we're trying to look worldwide, all the continents. So it's like Africa, America, Asia, and Europe, Australia also maybe. They'll catch up. So in the case of India and Africa, so India has shown like interest in launching its own CBDs, the central digital currencies, with the Reserve Bank of China or the Central Bank or Reserve Bank of India, which is just the Central Bank of India, actively exploring the technology as well. So they're trying to do more research on that side as well. Several African countries as well, like including Nigeria, with the e-naira, which is like the crypto as well, or digital, are also exploring the CBDs as a way to enhance their digital economies and reduce reliance on cash. So all around the world, people are trying to catch up, really, trying to move away from the traditional banking system or the paper money, paper cash, or any kind of coins, physical coins. Any tangible money, trying to go on intangible money, the ones online. So the fourth point is like the potential benefits of CBDs, the central bank digital currencies. So the first one is like the enhanced monetary policy tools, which is benefits of the CBDs. So CBDs could give central banks more precise control over money supply and enable new forms of economical stimulus, such as direct digital transfers to citizens, often called like pilot money. So in this case, the government have more control over money supply and enable new forms of economic stimulus. In this case, there will not be any stagnation of money in the case of China, but people are saying that the government have been centralized, like they're taking too much control on the people. So whatever transactions you make, buying or selling, the government will have to know everything which you do in the background. So there will be nothing which will be hidden from the government in the case of CBDs, the central bank digital currencies. The second part benefit is like to improve the cross-border policy payment. So in the case of cross-border, just like in the case of international. So improve cross-border payments. So in this case, it's like the exchange rates as well, like currency exchange. So international payments are often slow and expensive due to intermediary banks and currency exchange. So in this case, it's like the traditional one, like trying to pay people like the money internationally, like from euro to dollar to pound. It's like you have to go with the exchange rate and things like that, and it's a bit slow as well in the case of international. But if you're doing nationwide, it's much easier, or using the same bank. So if you're transferring from one bank to another with different banks, it's also much slow. It's like it's considered as international even though you're in the same country, and you have to consider the currency exchange or the exchange rate in this case. So CBDs could simplify like cross-border or international transactions, reducing cost and increasing speed, especially in the remittance flows, like in the case of remittance flows, trying to remove the delays really and increase the speed. So in the case of Napoleon said fast and speed, activity, vitesse, speed and action. Those are the things which you need. So increase speed is much better. So just transfer 1 second and maybe 1 or 2 or 5 seconds, and it reaching your friend's account, despite there being another country. So they talked about the benefits, like to reduce transaction cost as well, the benefit of CBDs. So CBDs can bypass many intermediaries. So intermediaries, like in the case of trying to bypass the securities or any delays, reducing the fees and costs associated with traditional financial transactions. So this could benefit consumers as well as businesses alike, especially like for small transactions or micro payment or little payments. The fourth benefit is like better security and fraud prevention. In this case, like it is more encrypted, or in the case of encryption. So unlike cryptocurrencies like Bitcoin and Ethereum, which can be subject to hacking and theft if private keys are compromised or shared or revealed, CBDs issued by central banks could have built-in security measures to prevent fraud and counterfeiting as well. The fifth point, we're going to look at the challenges and risks of CBDs. So in this case, we cannot just give benefits. We have to look on the risk as well, the other side. So the first one is like the privacy concerns. So one of the main concerns about the CBDs is privacy. Like government would have the ability to monitor transactions, which could lead to potential surveillance of citizens' spending habits. So in this case, so I keep saying China. So in this case, if the government have the centralized or digital currencies, which is the aim of CBDs, the central bank digital currencies, they will see all their transactions. They have the ability to monitor all the transactions and surveillance also of the citizens' spending habits. So if you have someone keeps spending online and things like that, or spending maybe outside, maybe buying things from China, from this, from that, your government are going to monitor all of those transactions, which means there's a lack of privacy in the case of individuals or citizens. So balancing privacy with the need to prevent illegal activities will be a critical challenge in this case. The second one, risks or challenges of CBDs, is like the financial system disruption as well. So widespread adoption of CBDs could disrupt the traditional banking system. So in this case, it will mean like we're moving straight away from the traditional banking system. So if people start holding CBDs directly with central banks, it could reduce the role of the commercial banks in the financial intermediation as well, leading to instability in the banking sector. So in this case, instead of going to financial banks or private banks, people will be dealing directly with the central banks, because this is CBDs simply based on the central bank digital currencies. So in this case, we don't need the central banks, we don't need them private banks, we don't need them business banks or commercial banks. You just need the central banks. You need the central bank, not commercial, private, or any business bank really. So in this case, I think the people working in the bank or the bank owners are the ones who are going to protest, or the ones who are going to put too many restrictions, or to uphold the really stagnation, trying to stagnate the continue of the digital currencies. But since the Bitcoin is already in the market and the crypto as well, it is too late for them really to put too many measures on that, or too many delays. So the third risk as well, or challenges of CBDs, can be like the cybersecurity risks as well. So in this case, you're talking about vulnerability or cyber attacks. So as a digital currencies are fully reliant on technology, in the case of like blockchains, in the case of bitcoins and crypto, they're all on the technology, like online technologies or blockchains tech. So they are susceptible or vulnerable to crypto, like cyber attacks, which is just online attacks as well. Securing CBDC systems will be crucial to ensure their success in this case. So we need more security, we need more to look really in the case of online attacks. So if you share the password, or if you just share the key, people will be they can easily actually hack you if you've been hacked, or in the case of the hackers. So the fourth risk is like the economic impact as well. So the introduction of CBDs, central bank digital currencies, could shift the dynamics of our money flows through an economy. So if individuals hold the CBDs in larger amounts, it could reduce the liquidity, which is just maybe cash or saving accounts, available to commercial banks for lending and investments. So in this case, you have to think about lending and investments as well. So like in the case of lending, you become a creditor. So you have to think about debtors as well. The people go to borrow money with the bank. How will they be capable to reduce, to play with things like interest rates? Are they going to increase or decrease the interest rate, which is the mechanism the central bank usually use to print more money, increase the interest rate to discourage more people from borrowing. When the interest rate is being decreased, let's say from 15, 20% to 5%, you're encouraging more people to come to borrow. So what can we say, ladies and gentlemen, in summary or in conclusion about the CBDs, the central bank digital currencies, about the Bitcoins, the Ethereums, which are based on the blockchain, decentralized and centralization. So in this case, we have the difference between the cryptos and the CBDs, central bank digital currencies. Why are CBDs getting more popularity? So we have seen all of that. I gave the examples of the countries which are exploring the CBDs, the benefits also of the CBDs, and challenges and risk of the CBDs. So in summary, ladies and gentlemen, the rise of digital currencies and the CBDs, which just stand for central bank digital currencies, represent a new frontier in the world of finance. So this is like the new future, the 24th century. On the 22nd, the whatever century is coming up. So this is a new future, trying to remove the old traditional banking system, paper and coins, and moving to more digitalized coins or currency. So while cryptocurrencies like Bitcoin have captured like the imagination of investors and technologists, CBDs offer government-backed, secure, and efficient alternative that could transform how we transfer or how we transact, buying and selling, how we transact like transactions. So as central banks around the world develop like the test CBDs, develop and test the CBDs, the future of money may become increasingly digitalizing everything just online, like offering new opportunities and the challenges at the same time for the global financial system. So we have to be ready, ladies and gentlemen, about digitalizing more money instead of keeping money in the pocket, in the saving accounts, just sitting there idle. So in the case of digital currencies, there's no stagnation of money. In the case of China, instead of the people having money in their saving accounts on the pocket or keeping money in their homes, houses, or in some countries like they usually do, in the case to increase the dollar, people just take the dollars and put in the house to increase the value of dollar. In that case, they usually make more governments to fall as well and increase inflation. So in the case of paper money, it is so easy for individuals to bring an inflation in the country whenever they want. So in this case, like China have more moved from paper or traditional banking to the digital currencies. They have taken full measures to remove stagnation or the market crisis or inflation in the future, in the near future. So this is the only solution to fight stagnation of money, to fight market crisis. In the case of the Wall Street 2008 in America, this is the only solution for the future. So ladies and gentlemen, thank you for watching. Don't forget to share, like, comment, and I like your comments. Keep the comments keep coming up, really. Keep filling the comment section. Comment, sharing, we want to hit 1K as well. Keep liking and sharing and subscribing. Thanks so much for watching.